Hey everyone, this is your Market in Minutes report. This is Mike Mentor, Chief Investment Officer with Financial Synergies. And it is Monday, December 4th, and we're looking back, of course, on last week, which is November 27th through the 1st of December. So let's jump right into it. And man, my gosh, I cannot believe it's already December. It's wild. It seems to, holidays seem to come and go faster and faster every year, but we'll try to enjoy it while we can, right? So last week on Wall Street, 5-day performance, just really stellar across the board. All the major indices were well in the positive. You saw Russell 2000, which is, of course, we've talked about as your small capitalization stocks, much more sensitive to interest rates and kind of economic factors. And so as rates have come, yields have come down, and there's this kind of growing consensus that we may get out of this without some major recession or maybe more of a soft landing. You've seen small capitalization stocks really take off and flourish. So that's nice to see. We need broader participation in the market than just your large cap stocks, which is what you see up here with the Dow and the S&P. So this is a good sign that the small cap has kind of come alive here. So let's take a look at year-to-date numbers. Excuse me. Again, this last month, or 5 or 6 weeks has been just phenomenal. Those returns have really boosted the year-to-date performance of all the major indices, just kind of through the roof here on some of them. You got double digits here on the Dow Jones, S&P, Nasdaq this thing is bumping on 40%. So just a phenomenal year, especially for the large caps, and now small caps really showing some signs of life. And foreign really shining this year. Kind of came out of nowhere. It's been such an underperformer for so long, so that's great to see. So we have our rates here, as we talked about. I added these in a few weeks back to kind of zero in on some relevant rates and just keep abreast of what's going on there in the Treasury market and the mortgage market. So this continued to come down. So 30-year Treasury at 4.42, 10-year at 4.24. 2-year at 4.6, so still inverted, obviously, as we've talked about, at the front end of the curve, yielding more than the longer end. So still inverted, but getting more normalized. And 30-year mortgage did drop off. At one point, it was pretty well above 8%. Now it's come back down to 7.61. So this, generally speaking, should help the housing market. We'll see. There are already signs that it's at least rebounding a little bit, but let's face it, 7% is not exactly what we're used to, so it's going to take some time. So last week, really the story was just stocks continuing to edge higher. The market digested, November's robust gain, so it kind of was digesting what occurred in the previous week. So it was a little mixed throughout most of the week, but then on Friday, it really rallied amid falling bond yields. So Friday was a huge day. Sentiment remained positive as inflation showed ongoing signs of softening, boosting hopes that the Fed may end its rate hikes and consider rate cuts next year. Fingers crossed on that, but no guarantees. But it's possible. It's possible. Investors also welcome news of really good spending in the holiday season thus far. So early reports are very good. So that's great. Declines in bond yields reflect that the financial markets are positioning for a rate cut soon. Again, that could be premature, but that is kind of what the markets are pricing in right now. Even brushing off Powell's Friday comment suggesting it was premature to consider monetary loosening. They're always going to be cautious in their statements, so that's not a surprise. But all in all, good news. So the story continues, inflation easing. So the PCE, which is the Personal Consumption Expenditures Price Index, that is a mouthful. The Fed's preferred measure of inflation was released last week, showing core PCE, excluding energy and food, rose just 0.2 in October and 3.5% from a year ago. This was much lower than September. So good, moving in the right direction. More notably, core prices rose at a 2.5% annualized rate over the last 6 months. This is close to the Fed's target rate, this 2% rate that they want to get to, and a big improvement over the previous 6-month annualized rate of 4.5%. So really dramatically coming down here. So this is all good. The report also reflected a slowdown in consumer spending, a possible indication of the impact of the resumption of student loan repayments could be a factor, higher prices, and shrinking savings. So that is kind of the story from last week. Let's look at what's on deck for this week. So we got some key economic data coming in. Monday we got factory orders. Tuesday we've got Institute for Supply Management Services Index, job openings and labor turnover survey. That's your JOLTS. We always keep an eye on that. Always interesting. Wednesday we've got your ADP employment report, big one. Thursday jobless claims, always good. And Friday, employment situation and consumer sentiment. So really a pretty big week for economic data. So we'll be keeping an eye on that, and that'll tell us a lot about the health of the economy and inflation. So companies reporting earnings, nothing big this week. AutoZone, Mongo on Tuesday. I don't even know what Mongo is, but that's on Tuesday. Thursday, Broadcom, Dollar General, and so that rounds that out. So that is what is on deck for this week. So I hope you found that helpful. As always, we will report back to you next Monday on this week's happenings, and hopefully we have a good solid week. We shall see. So this is our contact information as always. Any way you want to reach us, please feel free to reach out. If you're a client or maybe need some help with your finances, please reach out to us. We'd be honored to speak with you. Here's our YouTube channel. Subscribe if you like the content. We do put out more than just the market in minutes. And so if you're interested in some of our investment and financial planning topics, check us out. Subscribe to the channel if you like it. So, okay, guys, I'll leave you with this disclosure and enjoy the rest of your first week of December. Thanks, guys. We'll talk soon.